Good morning and welcome to 3 Minutes on Markets and Money. Kicking off the first day of August, of course, a couple of things here to note is that August tends to be one of the weaker months of the year historically anyway. And as we noted in this past weekend's newsletter, so if you go to the website, realinvestmentadvice.com, just simply click on the newsletter link, we have a chart of the stock market, and we've had 6 straight months of advances in the markets, right? So 6 positive months in a row of advances. Now, that sounds great. It's been very low volatility here, but that's also one of the longer advances historically without a correction. So typically markets go up 3, 4, 5 months in a row. Then you get a correction for a month or two, and then you have another advance. That's just a kind of a normal market. So as we move into the month of August, which also tends to be weak in the first presidential election year, so kind of everything just kind of compounding all at once here, there is a risk of getting a correction. It doesn't necessarily mean we have to have a correction, just means that the possibility of one has certainly risen, particularly since it's been so long since we've had a correction. It was August last year that we had a correction, August and September, and it's really been since then that we've seen a 5% correction, much less a 10% correction. So just a very long period of time without just kind of a normal pickup in volatility. About 2 weeks ago, we talked about getting this buy signal in place. And of course, this has led to a pickup in the markets, and markets did rally back off the 50-day moving average. Now, the problem is that we've already eaten up a good chunk of that buy signal. Doesn't mean that we don't have some more upside to go here. But we said at that time that markets would remain fairly confined to previous highs, that there wasn't a lot of upside. So again, that really kind of remains the case here. Not a lot of upside here because of the deviation from longer term moving averages that kind of act like gravity, keeping prices from moving higher. But also just simply there's not a lot of downside risk here as well, because again, we still have a lot of stimulus in the markets from the Fed, $120 billion a month, a lot of bullish exuberance. People aren't concerned about a correction. But there are things that are certainly rising here that would lead one to expect potentially a bit of a correction here. Look, concerns over the Delta variant, self-imposed lockdowns, potentially that could be an issue. Weaker than expected economic growth here over the next couple of months because, again, as we start to move into third quarter, year-over-year comparisons for economic numbers are going to become much more challenging because that was where we had that 30% growth in the third quarter of last year. So a lot of these manufacturing reports, et cetera, are going to start to slow down fairly sharply. So we could see some disappointment here that could weigh on very elevated stock price at this point. So again, as we get ready to look into August, right, we've got Jackson Hole coming up at the end of this month. The Federal Reserve's not really expected to say much, but they could actually start laying some more concrete foundation around tapering, which could also hinder markets here. Again, what would help them do that? Stronger than expected economic reports. And now that we have unemployment benefits expiring and the eviction moratorium now being retracted, that's going to put a lot of people back out into the marketplace looking for work. So again, we could see a very sharp spike in employment over the course of the next 2 reporting periods. That's going to put more pressure on the Fed to start tapering as those unemployment rates begin to fall. So there are certainly issues here that could weigh on the markets. Doesn't mean to get overly conservative, but again, over the next month or so, certainly wouldn't hurt to be a little bit more risk averse at this point. Manage your risk, manage your exposure here, and we'll keep an update on what's happening with markets here. Make sure you get by the website, read our technically speaking reports every Tuesday. Our newsletters on the weekends will keep you up to date what we're doing with our portfolios as well. realinvestmentadvice.com.